welcome to another weekly financial update from RTS Financial Planning. This is where we go through some of the stories in the world of finance over the last week and also discuss some of the subjects that our investment committee are looking at as part of our RTS investment strategy. So, stock markets around the world had a negative week last week with all returning in the minus. And this was mainly due to the worry about the rise in coronavirus cases. Although many parts of Europe seem to have got control of the virus and case numbers are quite low, if we look at total worldwide cases, they are still on the rise, particularly in the likes of the US and Latin America. And even some of the countries that weren't that impacted first time round, so the likes of Australia and Japan, are also now starting to see a significant rise in the number of coronavirus cases. There was travel chaos in the UK this week as the government announced against non-essential travel to Spain, including the favourable holiday islands. This was done at quite short notice, and many Brits abroad now face the prospect of having to quarantine for 14 days on their return. Some backbench MPs and those in the travel industry have called for more localised regional travel corridors, so being able to fly to the likes of Tenerife, where case numbers are low, but not necessarily to the likes of mainland Spain, where case numbers are higher. This has all, of course, impacted airline stocks, with the likes of EasyJet and IAG, the owner of British Airways, suffering falls in their share price. It's already been a pretty rough year for airline stocks and not likely to get better anytime soon. But even though there was quite negative news for stock markets, the actual UK economy, there was some positive updates. The Office for National Statistics released the latest retail figures, and it showed that retail sales in June were actually up 14% compared to May, and this was well ahead of expectations and close to being back to where they were before the coronavirus crisis struck. New car sales were even up this time on July last year. Over across to Europe, and the ECB have actually extended their ban on European banks being able to pay out dividends and carry out share buybacks. There's obviously been a lot of money pumped into the system from central banks around the world, and the ECB is keen for the European banks to use this money for businesses and to help stimulate the economy. They don't want the banks to be seen to using this to line their own pockets and their shareholders' pockets. So what they want is for the banks to be lending this out to businesses. And they also want banks to hold as much cash as possible, just in case some of these businesses do end up defaulting on their loans. They don't want the banks getting into trouble. We all are aware of what happened in 2008 and the crisis with the banks. But again, of course, this has hit EU bank share prices, so they've suffered falls in the last week. And they're probably in for a tough time over the next year or so with interest rates being low. With interest rates so low, it's hard for banks to make a profit on traditional saving and lending products. There were more tensions between the US and China this week, which also had a big impact on world stock markets falling. The US last week shut the consulate in Houston, alleging that China used it as a base to steal intellectual property. And naturally, China have responded by shutting the US consulate in Chengdu. All of this is causing investors to sell out of equities and actually go to safe havens like gold, which has caused the gold price to reach an 8-year high. And many of our investors in the RTS investment strategy will know that gold forms an important part of our high risk element of the portfolio and can deliver very good returns when the markets are in a state of volatility or high volatility. So that's it for this week. That's wrapped up. Do please subscribe to the YouTube channel. We do produce more videos every week, and not just on weekly commentary. We do provide financial insights and financial tips for different products, investment strategies. So do subscribe to the channel. Also leave a comment below. Let us know how you're getting on with your investment strategies. What's working for you right now, and what are you worried about going forward over the next few months in terms of looking after your money. But until next time, take care.